Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 5th, 2020. Markets are now closed, and what I'm going to do in this video is from time to time I like to take a look at the international markets. So I have a list of about, oh goodness, it's almost 24 ETFs on various international markets. So we'll take a look at that, but I do want to start out with just a brief update on the broad markets. Not much has changed since the last update earlier today. This is a 60-minute chart of NQ. You have your time frame there, hourly bars. There's your symbol NQ, NASDAQ 100 futures. So we had the breakdown of the minor uptrend line, triggering a sell signal. And we're still below it, so I'm still, leaning towards a move down here towards this to the trend line. And again, where that comes in would all depend on if and when we get a pullback, how sharp it is. If it was very sharp and it came tonight and into tomorrow morning, it probably looks something like this and come in with that 11,687-ish level. And otherwise, we could zigzag down on through here, hit it at a higher level, but that's still my pullback target there. Divergence, as you can see on the PPO, not completely or not extremely oversold on the RSI, but definitely oversold. We made it up to about the 80 level. I just have an extreme level here, about 87, that typically caps most rallies. Not to say that other rallies haven't been capped under that level, just that when you go back in time, and you hit that extreme level, you got a pretty good chance of a big correction coming, like here, here, here. And on the ES 60-minute chart, ES are the S&P 500 E-mini futures. There's that rising wedge or minor trend line right there. There's a minor trend line and the primary uptrend line, which is also a target. So we broke down here. We've had a couple whipsaws, but that one actually green. We closed back above it. These are bars. You'll see the same thing if I put it back on candlesticks. You want to look for a 60-minute close, and so when you see the candlesticks there, I'll zoom in real tight. I know we're doing a video. You can see a little whipsaw down below. Caught on a lot of reactions, and boom, one big red candle. That's your sell signal, confirming sell signal. So that increases the odds of this breakdown playing out. And targets again are about 34, 60, 50, and that also roughly aligns with the uptrend line. Again, depending on if and when we get there, something like that. So that'd be the pullback. On the S&P 500, it'd be not much, about 1.5%, and a little bit more on the more higher beta NASDAQ 100. All right, before we get into those international charts, let me just show you something I keep going back to on the weekly charts of QQQ and SPY. And I did point out the bearish crossover recently that we had, and we've had a correction here. We had a big red candle last week, but so far an even bigger candle. Now the week's not over. That candle will change tomorrow. It's either going to be as big, bigger, or smaller, the body of that candle, depending on where we close the week. Remember, weekly candles, all that matters is how you close on 4 p.m. on Friday. So as of now, that big green candle undid a lot of undoes a lot of the bearish implications of that big red candle there. And when I look at the weekly chart, and it's a common theme I'm seeing on a lot of stocks, like the market leaders, the big fangs, is these potential divergences. Now, all we had recently, as I pointed out, was a bearish crossover in the PPO without any divergence. But you can see the PPO starting to curl up here. You have some upside momentum right now. The elections, well, they're not over, but close to being over. And it just appears to me, by eyeballing this chart, just gut feel, instinct, past trading history, that the S&P and QQQ, we're looking at QQQ here, may want to eke out a marginal new high to put in negative divergence, a divergent high, because when you get the divergences on the weekly chart, again, they are not an absolute necessity for a correction, but they are a pretty good indicator. You can see negative divergence here and here of a big correction. That was the big drop into the 2018 lows. We had a little bit of divergence right here on the RSI right there, if I draw it at that point, and right here, leading up to the big COVID drop. And now we'd have much bigger divergence should we put in a marginal new high anytime soon. That means in the coming weeks here, probably before the end of the year, early January at latest would be my guess. Again, depending on how we develop here. Again, you don't have to have that snare, but it's certainly something to look out for. And you can see it here on SPY as well, and then I'll roll into the other ones. SPY, S&P 500, there it is right there. Let me draw it out. So it would look something like this. This line, that's why I have it extended a little higher. There's our previous high. Any equal or marginal new high anytime soon, and it could happen next week. I mean, theoretically could happen tomorrow, but probably be like I said, in the next week, coming weeks, maybe in the next couple months. And that would give you that nice divergent high. You'd have divergence here on the PPO, and you've been building divergence for a while there on the RSI, and that anytime soon that's going to remain intact. We'd have to take out the highs by a pretty big margin to burn through these divergences, meaning to take out those previous highs. So that's kind of an intermediate potential outlook there for the markets. Let's roll into the all the international markets, and we already covered SPY, so I'm going to jump to the next one. And no particular order, but I have most of the bigger countries, you know, the G7 and some of the bigger countries up front here. So this is Canada, you know, and it's funny when you look at and one reason that we stick to mainly the U.S. markets. I mean, I'm here in the U.S. A lot of people on the site, but not all. We have a lot of people around the world, but you know, the U.S. markets, so the U.S. is the biggest economy in the world, but we're also the biggest financial markets by far, and so the other countries tend to follow. I mean, the U.S. elections have nothing to do with Canada, but look, we have an equally strong rally that coincide with the rally in the S&P 500 and NASDAQ with a series of gaps, that big move up on EWC. I'm sorry, guys, if I don't make mention what we're talking about, I'll try to do that. It's right here. You can see, hopefully you can make that out in the video, the symbol EWC, and then the country. This is Canada. So what I see, well, we put in a divergent high there. We already corrected. Maybe that's enough. You know, one, two, you know, one wave down, counter trend rally, another wave down. We hit support, pretty good support right here. And that's a level to watch. Should we turn back down anytime soon, about 26.42. Make it a little brighter for you so you can really see it. Upside. And again, this would mesh with, you know, another marginal new high in the U.S. We can extend these divergence lines. We already had negative divergence in place at that previous high. That's right here. And should we go on and make a marginal new high, you can see some resistance levels, whether it's here. You know, all you have to do is equal the previous high or get above it. So there's resistance about 29.57, then about 30.55. So anything up there would give us that larger divergence on the daily. And again, that will show through on the weekly chart of EWC as well, should that happen. So that's right now. You know, I'm leaning towards that scenario. I'm talking intermediate term. Don't be confused with what I start out 60-minute charts. That's just a quick pullback. This is more of a potential, you know, where we might be going here in the coming weeks, not hours to days. And that's EWC. Now I'm going to rifle through the rest a little bit faster because you're going to see a lot of common traits, although some countries definitely look better than others. And again, I do this for many reasons. Diversification. You know, there's, you know, especially in long-term investment accounts, one should have international exposure, but also trading ops. There's traders that might want to move around, may not want to be in the U.S. right now, or may want to trade other countries, or they may live in those countries. So and this might give you an idea where your markets are going. EWG is Germany. I don't have a strong read on this chart, but what I can tell you, you can see, I mean, this is common stuff. Again, you can see all the lines on here. Last time we had a divergent high right here was just before the big drop off into the March lows. So this wasn't random. The COVID drop was priced into the charts, and you know, was a quick, big drop, biggest drop in many years down. And then we put in this small rising wedge. Again, we had negative divergence at the high there, and we've had a healthy correction. This has been a big drop. Boom, boom, boom. So far, wave one down, wave two up, another counter trend rally. Maybe we get one more wave down. All I can tell you is that EWG has rallied back to resistance right here. Some of these levels are older levels I've had on my chart, about $29 there. If it continues on up, oh, excuse me, I had a distraction there. So if we continue up, what you want to watch for is a trend line here. So of course, resistance is resistance until unless taken out. That's a pretty big level, by the way, that 29-ish level. It was support, broke it, back tested, helped to validate it, tested it from below, failed, finally broke above it, tested it for a while, started to rally, finally gave it up in the COVID lows. We also broke that, the COVID drop into March. They also took out that uptrend line. Boom, that happened. Rallied back up, hit it, big correction, big pullback. Little couple whipsaws through there, but for the most part, we broke above it here and we rallied, and there it is. So we're back under it. So pretty big level. If it can be popped, then look for a back test of the trend line. There's also a resistance line there, and ultimately we may go on, and if we do, it would mesh with what's going on in the US markets. That would be that marginal new high. So if we do rally, and let me say this, if the US markets were to rally over the next few weeks, make new all-time highs, you're most likely going to see Germany and all these other developed countries coming up with it as well. So it would mesh. Whether Germany makes new high or not, that would, we'd most likely see some upside. So there's that potential scenario. I don't want to call it picking up nickels in front of a steamroller, but I do think the upside is limited. In percentage terms, let me just tell you, if we made that marginal new high, you're talking about 10%, and I think that would be it before a meaningful reversal. But there may be that 10%, and there's nothing wrong with riding up a quick 10%, getting out. I mean, that's the beauty of swing trading. If you can get 10% in a month, I mean, the markets just did it in a week. Not even, they did it in a couple days. You book that, or even part of that 10%, you book it in a week, try to annualize that return. I mean, if you're 10% in a month, that's 120% a year. Not that you're going to do it each and every month, but it's pretty powerful stuff. And that's the beauty of swing trading. Get in, catch some of these rips, and get out, and wait for the next setup or move on to the next one. So there's EWG, EWI, this is Italy. Italy just broke above this minor downtrend line, but it's coming up on some pretty big resistance here. I have a resistance zone. It should go all the way back to here. You can see it right there. It's capped. It's acted as support resistance a lot in the last few years. And when it finally went here during the COVID drop, once you gap down, that was it. That was all she wrote. Straight plummet down. So again, it's been a significant resistance level. We recently came and back tested it and failed. Boom. And now we took out this minor trend line. We're running up at it again. Bottom line is resistance until and unless taken out. But if we can pop it, that's bullish, and that opens a door, I would say, all the way to about up here to about the 20, what is that level? It's actually this line here, about 28.50, or we'll call it $28 to be safe. And again, like almost everything else, let's say that does happen. Let's draw the line. Let's extend this divergence. We already had divergence, which was the catalyst for this drop. It wasn't random. It was priced into the charts. Should we run up there, that divergence will be intact. And then if we reverse, that is, and we'll just have bigger divergence, setting the stage for an even bigger potential drop. You'd have to move these lines up here, because if we rally that much, you're going to move these indicators up. So again, and it doesn't have to even go that far. Just anything above these previous highs would be a new divergent high there. EWJ, Japan. Japan's trying to break out to new all-time highs. You can see right here, you had this big high back in late 2017, and then we failed back below their resistance. Boom, 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 boom. We're testing that level again. We're slightly, well, we're right about on it, about $61, give or take. But you can see divergence building. So it's going to be, if we push up here, you have to take this to go to new all-time highs. But again, anything much above where we're at now will break you out of a pretty significant resistance zone, likely to give you a rally here. But again, that rally, I have my concerns. I think it's going to be somewhat limited because, as I often say, breakouts that occur with overbought conditions and negative divergences often fail. So again, I see limited upside in most of these developed countries. Here's EWQ, it's France. Kind of a choppy, messy chart. Not one of my favorite charts, but you can see some of my levels here. We had a minor downtrend line broken. Pretty good resistance here, about $30. There was your last divergent high. And again, this is what I look for. These divergences, more often than not play out for trend reversals, whether they're bullish divergences like this one. There was your rally there. Or negative divergence, divergent highs, negative divergence like this one. There's your breakdown, your sell signal, and boom. That's what happened after that divergent high. So that's where we're at. EWQ, that was France. This is the UK. The UK has been sucking wind. I mean, look where it is at. Where the US markets are not far off all-time highs. as are some other ones, but the UK has just really just been beat down here. I guess it had to do with Brexit and everything else. I'm not sure. But what I do see here is a trading range that we've been in for a while. A little trading range there. Excuse me, I had to pause the video for a cough. Downtrend line. If we pop that, we go to the top of the trading range, and then you have some pretty decent resistance here, about 28 and change, and you can see that resistance goes all the way back here to early 2016. So UK definitely has its work cut out for it. That would be my maximum upside right now. That's a significant resistance level. Ultimately, if we break it, you enter this trading range here. You know, you can see my two lines, and you would probably ultimately head up to the top of that range. But first things first, you got to get through it. So that's what I see right now is, you know, if we pop this minor downtrend line right here, maybe the top of this zone, or let's just say up to that 28.33 level. There's not a lot of resistance at the top of this zone, but you know, I think it would come into play, and that would be, what is that, about 8% upside. So trade it if you want. Not my type of trade. I like to buy things like this on pullbacks to support like this, or we're at the bottom of the range, and we're not too far off the range now, but we already did bounce off it. Again, this is the bottom right here, top, but then bigger resistance up here. The top of the range, as I said, is not defined by a lot of reactions, so you got a couple up there. EWA Australia, okay, you can see some boxes. I know the chart's a little busy, but what stands out to me is this is a long term. This goes back to early 2017, a multi-year trading range. You can see for almost all the time since 2017, other than a few brief dips down below, this is where Australia's traded. So it looks like a market, an index that's topped, you know, long ago, like many other indexes. You know, I talk about that all the time. I mean, a lot of sectors, a lot of countries entered bear markets, topped out years ago, or at least in the last couple of years. And it's just the U.S. You know, we've been pumping, I guess, more liquidity into the system than other countries around the world. Maybe better off a little bit economically as well. Either way, there's a big trading range. We're in this trading range now, just below it. So whereas normally I'd say, hey, a breakout of this range is bullish, and it is, but you have to enter this range by a good amount. So I just want to say, as I always say, resistance is resistance until and unless taken out. So if you want to, you know, just play the safe bet or the conventional bet, you say, okay, well, recognize this recent trading range here, plus the big resistance that I just showed you, the bottom of the much bigger range, and you short EWA here. You short Australia for a move back down to the bottom, or at very least the midpoint of the range. The midpoint will often act as support and resistance as well. So minimum target, max target. However, if you're glass half full right now, and like I said, I can make a decent case that we get another thrust up. A lot of these indicators, although you had divergence at this recent high, you had a correction. In fact, extended out, we just equaled that high or made a marginal new high. We now still have larger divergence. So a pop into this range, like everything else, is going to give us, it just extend the divergences that are already in place right now. I'm trying to move these lines around. It's hard because you grab all these boxes and other things. There it is. So there's your divergence line. And that's why I'm a little bit skeptical of how far a bounce, you know, if we recover and get back into this range, whether or not we're going to go all the way to the top of the range, because we're going to have this divergence anytime soon. Ultimately, it may be burned out, but as of now, or any next 4 or 5% upside, at least the divergence will still be intact on Australia. FXI had a member in the trading room the other day said they're they're interested in Chinese or Asian stocks. You know what I recommend. There's a lot of ETFs out there for China and the other Asian countries, and I'll go over some of them. We're going to get into some of those right now, but this is one I've traded for years, and I told them, my thing was, hey, it's a buy rate and broke out yesterday. That's a clear. This I've had this boxed in channel for a long time. This is the channel. Our trading range, I'm sorry, there's our big resistance, about 45.75. There's the bottom of the range, but if you look at that top, that 45.75, just a beautiful level of a lot of reactions from above. Pop, pop, pop. We couldn't get above it before. It was support, support, support for a long time here. Finally broke down, and that sent us to the bottom of the range. So it's been this. Boom. up to the top. We had a brief break above and then fell back in it, and it's just been a wash, rinse, repeat trade. Other than, again, everything, COVID drop into the March lows, everything melted down, and then we spiked right back up, V recovery, right back to the top of the range. This time around, we only pulled back to about that 40.81 level, and we're already back to the top, and then we broke out. So that's it. I mean, that was a confirmed breakout. That's what you want to see. Big green candle, impulsive buying, big volume on the breakout, follow through today, coming up to the first target. I have about 48.76. It could certainly continue on, but like everything else, my concern right now is our divergence is building. Now, if China continues, if FXI continues to run through, it'll take out the RSI divergence first, meaning take out that previous high, and it may take out this divergence. So lots of ways to trade it. Yesterday was the best entry. Today was you're getting close to that first target. Should you pull back and back test that, that's an objective entry as well. Otherwise, if we hit that 48.76-ish level, I'd move that line up. Let me move that up and call it 49, much closer to 49. That's my target, right on those reaction highs. Probably get a reaction when we get there, and so maybe you can buy a pullback and or a breakout above that 49 level, especially if we consolidate first. That's China. But again, be careful and just watch all the other markets as well. China is halfway around the world, but U.S. markets have been rallying strong since the election. Has nothing to do with China, but look at their rally. It equals ours right there, about 9. What I showed you earlier today on the S&P 500, about exactly 9.5%, if I recall correctly. So that's what China's rallied. So that's the point. Is that all these markets are very interrelated. Particularly in these short-term moves, but they do have different longer-term charts. China again peaked back in 2018 and still well below that high, but again looking better than some of the other ones right now. Another Chinese ETF, GXC, same thing. Had a breakout recently right here. This was a previous high. I guess at the time I questioned it because I had a question mark. Was that a blow off top? Figuring it probably would be, and that most certainly turned out what that is. This is what a blow off top looks like. That last run after an extended advance, you get almost a parabolic run, and then boom, that came. And that was the top until recently. Came up, we tested it there and failed. Then we came here and we broke out recently. We consolidated above that level, that should be 124. Since it's so darn close, we'll round it up. We'll call it the 124 level, and then boom, started to take off the last couple days. Divergence in place. That's not a sell signal, and again, you got to take the breakout for what it is. This is a breakout to new all-time highs. Unless this breakout fails, by failing I mean moves way back, well back below 124. It can come back and back test, and when they do, they usually run under there a little just to clear out the stops. But I just want to say this is bullish. So if you get a pullback to back test 124, that's an objective entry. You want to buy it here. I hate to chase a move like that after 2 days, but there may be more upside left. And again, it's a breakout to all-time highs, which unless it fails is bullish because everybody in this ETF right now is profitable. Nobody's underwater. That's why breakouts to all-time highs are technically bullish. You don't have the remorseful holders that are just dying to get out on the first pop up. CWI, this is a more diversified. I believe it's Asian countries. No, it's ex-US. So it's a more. I have to revisit this one. I think it's definitely a global ETF. It has multiple countries. A little trading range there and a pop starting to pop above it. You can see a little breakout today. Not very impulsive, but if it continues to build on this, that's bullish. But like I said, here's the thing. Everything I'm seeing right now, building these divergences, just like the divergences you had leading up to the last big drop with the, I keep calling it the COVID drop into the March lows. RSX, Russia, a little minor downtrend line just broke out. And again, what does Russia have to do with the U.S.? But at the same rally, about 10%, what our NASDAQ rallied. Little bit of resistance right where we're at. But, with the downtrend line breakout, there's not big resistance until you get up here at about 24. And Russia's nowhere near putting in a divergent high. It already did put in a divergent high right here. Nice bearish rising wedge. Negative divergence. And it played out for a correction. and a pretty healthy one at that. I certainly met the wedge measurement, the projection of the wedge, and then some. Fell down to that 1977, pretty good support right there, big old gap, and so it's rallying. So here's one that looks pretty good, especially if we can get back above all these confluence of the 200-day simple and exponential moving average. Again, that would be a longer term swing target, 24. EWY, South Korea, there's another Asian market. Same story. It's looking good. It's rallying lately. Coming up on resistance about 71.76. Pretty good resistance, but if it can pop that, it may want to make a run at the previous highs. Although, like everything else, building divergence, so I'm not sure how much upside left. Like I said, I think it's relatively minimal before a decent trend reversal correction. EWH Hong Kong, we're struggling with this $23-ish resistance level. Started to pop above it today. If it can build on that, then that opens the door to 24.30, potentially 20, and then 25 after that if it can take out 24.30. Really not divergence at this time. There will be soon if it starts to move up. EWT, this is Taiwan. There's a divergent high right there, clear divergence in place, but it's in an uptrend. So as I said, divergence is not a sell signal, so we'll look for sell signals, especially if we get the divergences on those other markets, including the US. Then we'll start to look for sell signals in time to exit any longs and go short. There's, last divergent high was right there, and that's what happened there. Boom. VNM, Vietnam, in this price channel moving up. There's some divergence there, but again, it's trending up, and there's your line. So if you go long, if you can trade it this way, objectively, you buy long at the pullbacks to the trend line, and you just ride the trend up. But those are your objective long entries. First decent resistance is all the way up here, almost $17. So, if you're long Vietnam or want to be, try to buy near this trend line and have a stop somewhat below it, especially on a solid daily close below. EWM Malaysia, symmetrical triangle pattern. If most world markets go to the upside, if there's a little more upside, this one's probably going to break out. Minimum target at 28.28, some other potential targets there. Obviously, downside break is bearish, so you can have a stop below. Do you want to go long right here? No, you don't go long at resistance. You either wait for a breakout above resistance, or you wait for a pullback to support. Those are your two objective entries on this one. EWS, Singapore, I don't have it marked up much. I don't see a lot here. It's been floundering around. But again, it'll move up with everything else. If we get a broad-based rally in the U.S. and in other global markets, there's the line right there. 1955, I think that's resistance. If it can pop that, runs up here. There'll be some stops along the way. I haven't updated this chart in ages. You look for reaction highs like that in these gaps. So that'd be your first target up there, about 2058. EWD, Sweden, divergence already in place, but you can also see here, you have the divergence building, but you also have the PPO above the zero line as it's been since here, and it's turning back up. That's why I have that arrow. It's making a crossover. So we may get a little more upside. These divergence lines, even though it's in place, could be extended. It could play out any day now. We could reverse right here, and these divergences could start to play out. Or, as I have the lines up a little bit, we might have some more upside. 5, 6, 10%. Who knows? Hard to say. Until we get some signs of a reversal, but that's what Sweden looks like. EWK, Belgium. I'm not going to go over that much. We had a divergent high here. It's corrected. Correction seems to be over. Can't say it definitively, but a nice lift the other day, of course, in line with the U.S. markets. I don't have a strong read on this chart. You can see some levels, but I really haven't updated this chart in a while, so don't put too much stock into those. EWL, Switzerland. Wash, rinse, repeat stuff. Divergent high back in the COVID drop. Divergent low here. That's when you want to be going long in these divergent lows. You want to be going short on these divergent highs like that one. And you want to be going, short here, which, we had the correction, and correction seems to be over because we've had a nice retracement, but you can't say that for sure. But it meshes with a little more upside on a lot of these global markets to extend the divergences that were in place at that previous high and put in an even bigger divergent high, setting the stage for an even bigger drop. EWN Netherlands, same thing. There's your last divergence, played out for a pretty big correction. This one has a pretty clear chart. Big support right here, about 33.61. There's your divergence line and negative divergence. PPO turning up here at the 0 line. And let's see what else. EWO, Austria, probably give you a little trend line, something like that. I don't have a big opinion on Austria. You can see the levels there. Spain, there's a pretty clear downtrend line as well, and support. So if you're trading Spain, via EWP, that's it. You want to either buy pullbacks to this 21.15 level, or by a breakout above this downtrend line. You have a confluence of the 200-day simple and exponential moving averages right above as well. So a solid breakout above there, as well as those two lines, would be bullish. Where does it go from there? Well, I would say right about there. Two big reaction lows, and that's where we started to fall off a cliff in the COVID drop. So that would be your longer term target on Spain. EWW, Mexico, trend line right there to take out. Support down here. I'm going to grab one of these lines and tell you that that is definitely resistance right here. 37.86, big resistance. Bearish if we get rejected on it. You have two reaction lows and a big old gap there, and that reacts that high right there. So it's pretty big resistance. So therefore, I wouldn't take a breakout of this line. I'd wait for a breakout above 37, call it $38. EWZ, Brazil. Minor downtrend line broke out today. Divergent low, positive divergence too. I didn't note that on a lot of the other ones, but there it is, positive divergence there. And targets, I'm going to have to study it a little bit, but I'd say right about there. Let me give you a line. You have a gap and a couple reaction highs, about $33. That would be a swing target right now, minimum swing target for EWZ, Brazil. EZA, South Africa, big trend line to watch here. If you're trading South Africa, multi-year downtrend line comes off the beginning of 2018. Lots of reactions there. We've been boxed in this trading range here for a while, right there. Broke out today. So there's a breakout of the trading range. However, you have an even bigger resistance level, or as big, right above. So if this one can take out that trend line with conviction, that's going to be bullish. Targets, I didn't have every chart marked up here, but say somewhere around there would be your first target, 46.60. Two more to go. EIS is Israel. This one, easy peasy. Just look for these divergent highs and divergent lows, buy signals and sell signals, and just swing this one. And look at the trend lines. It trades very well to these trend lines. You get your sell signals on the breaks of the trend lines. Support levels, you go long at support. Look for divergent highs. You're not always going to get that big a drop. Obviously, the global economy's shut down. We would have had a drop from the divergences. This just accelerated at the COVID lows, and then of course, all the central banks pumping the system full of liquidity gave us a supersized rally that put in divergence right here. Correction. And we've kind of been zigzagging around. I don't have a strong opinion, but I can tell you the PPO is trying to turn up at the 0 line there. And the momentum's to the upside right now. So like everything else, if the rest of the global markets have another 5, 6, 7, 10% upside, this will probably do that as well. And last one, Greek, G-R-E-K, the global FTSE Greece 20 ETF. I don't even have a single trend line on this one. I don't know why. I had some divergence lines drawn before. Just eyeballing it right now, guys. I can just tell you there's a trading range right here. It's been bouncing in one little whipsaw above. Broke down, so that's bearish unless it can get back above this level. So Greece isn't looking so hot. Everything else has been rallying. I mean, we had a rally last few days, but we broke below $19. So that's resistance. Unless Greece can get above there, that's bearish. You could short it on a pushback to 19. Especially, you really want to be short this or any market if the rest of the global economies, global markets are dropping. Greece did have, by the way, negative divergence at that high, so it was telegraphed there for the drop, and there we are. So that's it. 19-ish is resistance, bullish if it can regain it, bearish if it gets rejected there. So two plays if you want to make a trade on either short 19 or 19.10 with a stop somewhat above for the next leg down, and or wait for a break above 19.10 to go long for a move up. All right, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.